I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing some green arrows around the world this morning as they try to price in the government shutdown. And many people thought we'd fall apart on this sort of situation. So, Scott, are you surprised to see the market react this way?
Not so surprised. Listen, you have to have a little apprehensive going into a major scenario like that. But sometimes when you lead into an event and an event gets discounted, when that event actually takes place, the opposite direction happens. And we all know that, since about a week and a half ago after the Fed met, the S&P hit a high of 1729, and we're down to about 3% off those highs. So finally, yes, we have the shutdown, and it's not going to be, the easiest thing to deal with. You're going to read it in the newspaper. People don't know what it means. But I think at this point, the market's trying to price it in. So it'll be interesting to see whether or not, we sustain this gap up or, they just sell it and it fades.
Well, why don't you show us then the levels that you're watching?
Okay, well, if we look at the S&P, we'll talk about the different trends. We talk about the macro trend that's been intact since the November lows. We tested it right here in June. We tested it again in August, and it held. Okay, but what we look at as technicians is, remember the breakout failure on May 22nd? That led to a 5% move to the downside. Then we talk about this little breakout failure here, led to about a 4% move to the downside, but the trend held. So when you take a look at where we are today, this was that last breakout failure on the Fed when you had them do nothing, which threw a lot of people off guard. And from then, we've corrected down to right around the 50-day. So yesterday we did hit 1674, not quite the trend line in the 100-day. Okay, so we did bounce off that, and today we're opening up. I would say use 1687 as resistance. If we were to get above that, I think that would be an obstacle or constructive for the bulls. But if we open up and fade, then all of a sudden you have to measure 1674. And if that doesn't hold, the 100-day has been, the place we hold, on a bigger, time frame. And again, now we need to see what happens. Does it, is it a day? Is it 2 days? Do they drag it out all the way to the debt ceiling October 17th? And I don't think the market, would be too complacent if it starts going past the jobs report on Friday.
Okay, so that's your marker. You think then by then that's all the leeway we have. The markets might get upset again.
Yeah, if we don't go back and all of a sudden they don't put out the jobs report on Friday, and it seems like the politicians are doing what politicians do, which is not a lot. But anyway, that's my opinion. I'm sorry if you're here to watch for the market. I can't believe the dysfunction that we have. But again, I won't get into that.
Right.
That's a different rant.
Right. We could go on for a little while.
Just
about
a little
that.
while there. So I think that if we don't get that jobs report Friday, the market's going to be upset, and they're going to force the hand to get something done. So
right, because we could see that delayed.
Yes, and there's talk about it, and people don't understand. I heard them today in the media talking about, will the jobs report come out on Friday? Is it an abbreviated version? So Wall Street hates uncertainty. But for what I will say is somewhat certain is that if you're a macro investor and you survived 1987 and you survived 1998 and you survived 2001 and even the financial crisis of 2007 and 8, you'll survive this. Don't veer off your course. If you're trying to play for P&L and intermediate cash flow or for a living, then I wouldn't be all in long or all in short, but there are a lot of things to do in this market if you embrace what's going on here because it creates opportunity.
Well, let's expand the conversation then and check in on overseas markets. How do we fit into the picture that we're seeing overseas?
Well, it's been a little bit more in the bullish case because we talk about how Japan has been acting okay, the potential bottom in China over the summer. So let's really quick at the FXI, something we've talked about but got a little ahead of itself. If you look at the chart here of the FXI, you will see it was in a pretty big downtrend from February. Okay, we did this double bottom in June and July, and then we had a higher low, higher low, higher low, and then it got a little frisky to the upside. But look at the size of this move. So from here, we've corrected a bit. We talked about the potential of testing this trend line. So, if you want a little, exposure for the long term to the FXI and to China, you're getting into a spot that's a little bit more, compelling, so to speak. If you look at the EWJ, we've talked about this numerous times. All right, a lot of people started to get really concerned about the May 22nd high here, and I know we pulled in 20%, but in perspective, we were up over 50. So with that said, here is your low. That was that red dog reversal right there. Here is this trend line that it broke back above, and it's still above it. So in perspective, I think markets are taking this in stride. Don't veer off the course and continue with your plan.
Well, let's check in on our leaders. Lots of leading stocks still act well, and some of those leaders were the first to go green yesterday, including Facebook, which did end up pulling back more than 2% yesterday, but it's still holding above upper support of 49.50. So all in all, still holding up well.
Yes, and this is, you want to figure out how cute do you want to be. And I know yesterday it was down with the overall market, and then it went positive, squeezing some shorts. Some people made money tactically to the long side, but then it ran out of a little gas. And if you look at the pattern here, it's had a big move. You never want to chase a big move. We talk about strategies from the swing trading class. A big gap tends to give you direction, and this didn't get filled. Here is trigger number 1, trigger number 2, trigger number 3. Then up here, it's extended. So with that being said, some have been looking for an excuse to take some profits or maybe get short. So yesterday, it did push through this 51.28 and then come back below that red dog reversal. Some might be short coming in today versus that, so it's up a little bit. So, if you see a negative divergence, maybe try and short it. If it were to trade through yesterday's low of, what is this, 49.80, you may be getting a little bit more, but I think you're kind of playing with fire here. I'd rather see you buy the dip at the 8-day, and if it doesn't hold the 8-day, I think this would be really, really compelling, but I would be surprised to see this. So this is your plan here. If it were to stay in this upper flag, then perhaps we'll just stay on course here. But overall, small spot to let's see what happens here.
And there's just no stop in the Tesla train. Tacked on another 1.3% yesterday, continuing to get upside momentum. But are we getting a little extended here?
It is getting extended, and I feel like I fight the naysayers for the last 4 months. We just try and educate people out there saying that when a stock is on a move like this, there's going to be a lot of people talking about the risks of it, and a lot of big-time winners start with high valuations and high PEs, and they grow into them if the story continues to execute. And then the Tesla story has been going and executing, so shorts have been trapped and the trend has been strong. You trust the trend in a stock like this versus the naysayers. With that said, it is getting a little frothy, so to speak, but it's on its way to that 200 price target. We talked about the 21-day moving average, broke it only once right here, and that was when Goldman Sachs came out and said it's only worth $80. So, they tend to scare some people. If they scared you out of your stock, you know what, write them a letter. Anyway, with that said, you had that red dog reversal right here, okay, giving you that entry and then digestion and commitment to it. And then fast forward, here's where we are. So if we get above yesterday's high of 194.50, they might want to tag 200, I don't know, today, tomorrow. But overall, this roadmap has been much more, prudent to be following from the technical standpoint versus all the naysayers and the valuation guys out there.
Write them a letter.
Write them a letter.
You done that, Scott?
Well, send them an email, better, because I don't think many people write letters.
Yeah, snail mail. All right, how
snail
about...
mail?
Yeah, you've never heard that before?
No.
Yeah, well, the real mail is sometimes called snail mail now. Anyway, Baidu had a strong rally right off the open yesterday to get back to highs, and it closed well off the lows, registered 0.6% of gains. Do we get continuation today?
I want to show this pattern here because it's something similar where a big pro gap helped give clues of a move, in front of it. And if you look here at Baidu, you will see that here is that pro gap right there after a pro gap right here. And what did it do? It digested it, didn't fill it, showed demand, and continued. We have this in a lot of our education courses. Learn that. Here we are again following the 8-day moving average, strong trend reversed. Now it's opening at highs. So this trend has been strong. A lot of the Chinese names have been really strong. You could even look at Sina, Sohu, SFUN. If you want to trade this group, but Baidu has been the alpha dog there.
And Amazon continuing to hover around the rising 8-day. Does it look like it's building up here, building up momentum?
I think I saw a headline out there that they're hiring 70 or 80,000 people for the holidays, which is a bullish sign. Let them, good job, Amazon. And a lot of time during earnings, they've been viewed as a miss because of they're building those big execution centers and call centers so they can prepare for these type of holidays. So with that said, the stock's been strong. If you're a stock picker out there and you've learned how to identify these names with trends, you've been rewarded. This is one of those names that a lot of different time frames, align. And you look here at Amazon and you will see that besides this, look at the monthly chart. Okay, if you picked this stock and said, I'm going to give it to the 21-day and stay in it since 2008, look at that. You were sleeping well at night and you have yourself a big winner, better than keeping your money in the bank. If you do it shorter term at the daily chart, we've talked about a lot of the technical strength here. Okay, and if you look, we had this breakout and then you almost had a retest. Remember the breakout, retest, continuation. And now what it's trying to do, it's trying to hover above this prior point of reference. So you want to take a closer look here as a trade. Looks pretty good. I would say the longer it stays above this, this 310, the higher the probability that this will be one of the first high beta names, in tech to make new highs. And that area is 319, 320. If it were to falter a little bit here, this would be the line in the sand for momentum, which comes in around 307.
All right, coming up, we're going to go in the trenches with some retail names on our radar. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with retail, where we have sort of a mixed bag, but some of the stocks performing really well include Raw Stores, which has actually been outperforming its peers over the last couple months. So this one looks pretty good.
Yes, in a very spotty group. This one's been holding up well, and if you're looking for some momentum, take a look at ROST. Stock's been very strong. It's at the highs, believe it or not, when the market hasn't been. So, at this point, really nice trend. This is, the more intermediate trend. This is your accelerated trend, and now it looks like it's going to try and get some momentum. I think above yesterday's high, if it's not there already, that's $73, and good to see some stocks being able to break out even in a tape that is 3% off the highs.
Yes, for, limited brands, for instance, it actually triggered the buy price on the price point sheet yesterday, and although the market put some weakness on it, it still held up pretty well.
Yeah, like you think of what was it down 120 points, and you have a green arrow here, and so
Right.
It shows you demand. And if you look at the chart, not the cleanest. These are not the cleanest vehicles to trade, but actually, you look at here. This was a nice wide range bar for those looking for it back here, and then this was that move. It's been digesting. So if the market wants to let some things break out, this also looks like it's a candidate above 61.66 for momentum. Hovering with the 8-day. So very constructive. If you're an investor there, congratulations. If you're a trader, maybe you get a little extra cash flow above this 62.
How about my favorite retail name to talk about, TJ Maxx, hovering around its 8-day, digesting the recent breakout. Where could we potentially get another one?
Well, this is somewhat wedging after multiple moves, and we like to see tight patterns because tight patterns that get very tight tend to expand, and that's what traders look for. You look at TJX here, and you will see it has a really nice pattern here, right? It's been following this trend line, getting tight there. Okay, you had a nice breakout move right here. Okay, that's been consolidated, considering the move that it's had from the August lows. So with that being said, take a closer look here so you can see for yourself the pricing. Okay, whoops, sorry. There we go. Open it up a little bit. You will see that right now above, what is that, 56.59. You could be on your way back to 2013 highs, which would have to eclipse as high as 57.16.
All right, time for some quick hits. Let's talk Google. It was able to close well off the lows yesterday, so perhaps this could be back on our radar for some upside movement.
Yes, and this channel has been long and it's been a little tedious. There's been some trades in the middle of it. We know that I got hurt a little bit last week when it broke below 895, but I was willing to give Google another chance. The stock doesn't remember that I bought it wrong and sold it better than selling it recently. But anyway, with that said, you look at the chart of Google, stocks, been really nice as far as you look longer term, really nice trend for investors. But it's been consolidating a nice move here, hasn't had much sustainability yet. Take a closer look here and you will see, this was the last time it had a breakout failure, led to a decline, okay, and then this descending channel gave you a quick move, and here was your pullback. So with that being said, I am long a little bit, and if it were to get above 880.84, perhaps it gets going again, and if the market actually has some sustainability, this to me is a candidate that at some point it can clear 920, and if it clears 920, what did we say a few weeks ago?
If it next $1,000 stock.
Could be the next $1,000
potentially.
stock. Yes.
We'll see. How about Apple? We have it hanging by a thread around the 50-day area. Depending on your time frame, could this be a buyable level?
We keep going back to Apple almost like an ex-girlfriend. Well, anyway, with that said, we know how that works out. Because you have such good memories. And anyway, with that being said, if you've been buying Apple wrong, you definitely don't want to go back to the well. But there's been some trades there that have lasted. And if you look at Apple now, okay, you look at this lower channel here after a huge move that we saw from 700 or so. So let's go back to here and forget about those times. Okay, we're in a new era. Hopefully the Carl Icahn era. Anyway, this was when it gapped up after earnings and gave us a nice move. So that's why we tend to go to this, because when it moves, it could be good. And now since then, it's been consolidating. And if you take a closer look here, not looking the best, but it's hanging here, like I said, a thread, the 50-day. If it were to get below 474.41 and not come back above it, I'll probably be stopped out because I have a little Apple also, and I won't look at it again until next time. No, I'm kidding. But anyway, it's starting to lose just, people are getting tired of it. 5 down days like this. So hopefully it gets going again, and if it were to get above this 482, perhaps this mini downtrend right here gets taken out, and then you have a bigger downtrend that comes in a little bit closer to this, 495. So 2 obstacles, obstacle 1, obstacle 2. Let's hope it doesn't trade below yesterday's low and stop me out of it.
Got it. Pandora building an upper level base around its 8-day. Could it be gearing up for a breakout?
This, people wrote this up for dead because of, iTunes Radio, and, don't write it off for dead until the trend changes. And right now, this looks pretty good. And some traders are watching it on my floor. We talked about a wedge in TJ Maxx. This is a different type of wedge. Okay, first of all, you have that gap. We talk about if gaps hold, put it on your radar because it could have a continuation move. With that being said, you now have a tight pattern here as well. So if this were to get above, what is this, 25.85-ish, we could see another move here. So put this on your A-list. This has a nice tight setup.
What do you think about SunPower? Had a nice breakout at 24.70 last week and has been holding above that breakout level.
Yeah, these solar names are somewhat random. Some have better moves than others depending on the day, and this one has been somewhat strong. You look at the chart here of SPWR, you will see that it has had a nice move and it's been trending. And for a solar name, look at the size of this move. So you never want to get in too late, but overall, again, we talk about the 8-day moving average and the 21. Stocks that are above their 8 and 21-day moving average are considered strong stocks. That's where you want to go. So with that being said, it is getting back close to these highs. If it were to get above yesterday's high today, I got to get my glasses out, 27, then perhaps you could see a move through 28.15. But look at some other stocks in the name. They tend to like to move in groups with the sun shining versus being lonely in the dark.
And I like that you said the sun shining as we're talking about a solar stock.
There you go.
All right. Well, as markets digest the fact that we do have a government shutdown here on our hands and what that really means for us, what will you be focusing on today?
I'm going to see if the gap holds and how much power there is to this rally, to see if there's any conviction, any commitment, because this could be just, one of those bounces that winds up fading. So I don't think, you want to go all in on the first 30 minutes, but see where some relative strength is, see if the banks act better, see if the home builders have a sustained bid, see if some of the high beta names that were strong last quarter don't get sold into the new quarter. So there's a lot to look at. But with that being said, there's opportunity. Yesterday we came into a sea of red and closed off those lows, so some people took some positions into today. You might want to trim and trail them. And overall, again, just know your time frame, because a government shutdown means a lot of different things to a lot of different people. And if you're a macro investor, don't be scared out of your plan. And if you're an intermediate time, intermediate trader, the way we try to navigate here, know that we've just pulled in off the highs. So we're trying to find a tradable pivot. And if that pivot holds, trade versus it, and if it doesn't, we'll have to figure out a new one, and we'll see what goes on with a little bit more data and clarity.
All right, sounds good. That's your morning call for this Tuesday. Happy trading. Have a great day. Bye.